Let's get to something we've been sort of dancing around, and that is the stock of the day being Viva Energy. So it is now back online, saying it expects its Geelong refinery to operate at reduced capacity in the short term after last week's fire. It says diesel and jet fuel production is running at about 80% of capacity, while petrol output is at around 60%. It says, though, that it has sufficient fuel stocks to maintain normal customer supply until July. It also has entered an agreement with the federal government to purchase additional cargo. So Viva says margins at the Geelong refinery surged over the quarter, nearly threefold to $22 per barrel. And Viva Energy shares, after coming back online, are one of the worst performers actually by percentage change today. So not seeing a lot of love, despite, Scott, the fact that, well, we've heard ad nauseum, it's one of the two refineries left in Australia. You've got to think we'll be putting some more focus on getting some more fuel refined onshore in the future, no?
You'd have to think so. I mean, to some degree, though, that's a risk for Viva, not an opportunity, right? Because it's one of the only two. If there's a third or a fourth or a fifth, it adds potential competition and potential risk. Now, maybe it's not. Maybe it just replaces imported fuels. But, you kind of, it's a bit like the second airport in Sydney. It's always better to be one of one airport than one of two. So Viva, happy to be one of two, I'm sure. Probably would rather not again be one of five or six. Although, as you say, geopolitically, that's probably where we're heading. The challenge for, and by the way, those margins are extraordinary. If you're a motorist watching, just shield your eyes or go and have a sit down. No one's surprised that they make a few extra dollars on the way through. Whether that can be continued, I think, is probably the open question. And again, it comes back to what we just talked about. And it's why you do have to have a view on Viva to decide whether or not you want to own the shares. You don't have to know the answer necessarily, and you can decide, as I will about to tell you, that if you don't know the answer, don't do it at all. So I wouldn't own Viva shares given the choice, because I don't know what the refining margins are going to look like. I don't know what the supply, what the volume is going to look like. Encouragingly for current shareholders on today's announcements, a couple of things. Firstly, they're going to get back to 90% within a couple of weeks, they reckon. Subject to plan inspections, that phrase may come back to haunt us and them, but subject to plan inspections, back to 90% until the repairs are done. They also said most of their unrefined crude actually comes from not the Middle East, but almost everywhere else, from Asia, North America, from South America. So they expect no issues. They've got commitments up until the end of July for volume. So as an underlying business, again, speaking of the operations of the company rather than the price or its share price, they have a business to do. Man, can you believe they caught firewood, got a fuel? What are the odds of that? Not particularly high, but that's where we found ourselves. So it is a fine, perfectly fine business. It's a transactional business. It's a middleman. It's going to make some sort of margin more often than not around the previous level rather than the current one in all likelihood, because they're competing not just against the other refiner in Lytton in Brisbane, but they're also competing against imported fuels. And that's why, frankly, we don't have those refineries here, because they couldn't compete. And that remains the issue. The government stepped up and again is throwing more money at them to keep them open. Again, a political rather than an economic decision in all likelihood, and we can debate that over a beer another time. But right now, I mean, look, they're doing what they can. They're trying to operate the plant as well as they can. What the cause of the fire and the results of the fire are and will be remains to be seen, and that may well weigh on investors. The share price had a pretty good run over the past few months, $1.80 up to about $2.40 or so. And I think probably the response today, share price-wise, is probably the results themselves. The market expected even more margin than Viva was able to deliver. Maybe had hoped the restoration of supply would be more fulsome and more quickly operated. So hard to know exactly what the market's thinking. For me, it's a sell, not because it's a terrible business, just because I don't know what their margins are going to be in a week, let alone a month, let alone a year. So how do you price a business based on that?
Yeah. All right. So Viva for you, Andrew, buy, hold, or sell?
Yeah, it's the too hard basket, like Scott. There's just too much going on. But I would say it's a sell, and it's been a sell for a couple of reasons. I mean, firstly, when it listed back in 2018, this was a business that made $500 million a year in profit. Ignoring the oil price for a second, they've never done that in every year since. So since IPO, they have only gone backwards in terms of profitability. That's not necessarily their fault. That's global competition. But the point is, it's a commodity business where you cannot be virtually certain earnings are going to rise into the future. And thanks to the RGC and thanks to Trump, it's currently on a PE of 115, even before the fire. And when you get offered a PE ratio or a sentiment like that for a business that's shrinking, my suggestion would always be, and our Teaminvest member suggestion would be, take the money and put it into something else where you can be far more certain of growing earnings and therefore likely wealth in the future.
All right. Thank you. So that is a sell from both of my guests.